Canada is making a bold move, one that could reshape not just its own auto industry, but potentially influence global trends in transportation and climate policy. By 2035, every new car, truck, and SUV sold in the country must be zero emission. This means gasoline and diesel vehicles will be phased out, making way for electric, hydrogen, and other clean technologies. The electric vehicle availability standard is a binding law, not just a suggestion. Automakers will be legally required to meet these targets or face significant penalties. Interim targets ramp up quickly. There's no time to waste. The government has set aggressive milestones to keep the industry on track. By 2026, 20% of all new vehicles sold must be electric, a huge leap from current levels. This will require a rapid expansion of EV options and charging infrastructure, and by 2030, that number jumps to 60%. Automakers will need to overhaul their supply chains, invest in new technology, and rethink how they market vehicles to Canadians. This forces automakers to prioritize Canada for their limited EV supply, ensuring Canadians get access to the latest green tech. It could also mean more jobs in EV manufacturing and related industries. Officials argue this is essential to meet climate goals, reduce air pollution, and help Canada reach net zero emissions by 2050. They point to similar policies already in place in British Columbia, Quebec, and California, regions that have seen EV adoption soar thanks to strong government action. But the move has rattled the North American auto industry, raising concerns about costs, supply chain disruptions, and the ability to meet such ambitious targets. The industry now faces diverging rules between Canada and the US, which could complicate cross-border trade and manufacturing. Automakers must juggle production and sales strategies for two markets, with different demands, regulations, and timelines, potentially increasing costs and logistical headaches. The big question: will Canada's experiment speed up the green transition, making the country a leader in clean transportation? Or will it spark economic and trade headaches across the continent as automakers and governments scramble to adapt to a rapidly changing landscape? The US is watching Canada's EV mandate with growing alarm, as policymakers and industry leaders see the new rules as more than just a domestic policy shift north of the border. For decades, the US and Canada have shared a deeply interconnected auto industry, with vehicles and parts flowing seamlessly back and forth. Now, Washington fears that Canada's aggressive push for electric vehicles could have ripple effects that threaten the stability of the entire North American auto market. US officials see the Canadian mandate as a potential threat to American jobs, investments, and the competitive edge of US automakers. There's concern that stricter Canadian rules could force automakers to shift production, disrupt supply chains, and ultimately put American workers at risk. In response to these mounting pressures, Washington has taken bold action, imposing a 100% tariff on Chinese-made electric vehicles. The goal is clear: block a flood of cheap imports, protect American manufacturers, and send a strong message that the US will not stand by as its market is threatened by foreign competition. The underlying fear is that Chinese EVs, unable to enter Canada due to new regulations, could be redirected and flood the US market instead, undercutting domestic producers and destabilizing the industry. US officials are also deeply worried that Canada's policy could disrupt the tightly integrated North American auto supply chain, a system built over decades, where parts and vehicles cross the border multiple times before reaching consumers. Every vehicle assembled in North America is the result of a complex dance of logistics, with components sourced from both sides of the border. Different rules and standards threaten to upset this delicate balance, creating uncertainty for manufacturers and workers alike. Determined to defend its interests, the US is prepared to use every tool at its disposal, including the USMCA trade agreement, to challenge what it sees as unfair or harmful policy decisions by its closest trading partner. The message from Washington is clear: America supports the transition to electric vehicles, but not if it comes at the expense of its own industry, its workers, or its economic security. The result? Rising trade tensions, heated negotiations, and the dawn of a new era of economic brinkmanship between two of the world's closest allies. As the US doubles down on defending its market, the world is watching to see how far it will go, even if it means a high-stakes showdown with Canada, its trusted neighbor and partner. A new worry is emerging: dumping. As Canada's EV quotas kick in, automakers may be left with unsellable petrol cars north of the border. The obvious solution? Ship them to the US and sell at a discount. This could trigger a price war, slashing profits for American dealerships and tanking used car values. Industry groups warn Canada's mandate is too aggressive for current demand and infrastructure. The risk cheap Canadian petrol cars could slow US EV adoption, undermining climate goals. Consumers may choose a bargain gas car over a pricier EV, stalling the green transition. A policy meant to promote EVs in Canada could end up prolonging fossil fuel dominance in the US. Canada's EV mandate is testing the USMCA, the backbone of North American auto trade. The agreement was built for seamless cross-border production, but Canada's new rules threaten that harmony. US Trade Representative Catherine Tai warns of major disruption to the integrated market. The US may launch a formal dispute, arguing Canada's quotas are a non-tariff barrier that distorts trade. Automakers say the policy could give Chinese EV makers a foothold and create supply chain chaos. The USMCA wasn't designed for this kind of regulatory split. Now, two allies are at odds. Canada pushes for climate action. The US fights to protect its market. How they resolve this will set the tone for future trade and the future of North American manufacturing. The fallout from Canada's EV mandate could hit American workers and businesses hard. A flood of cheap Canadian petrol cars would force US dealerships to slash prices, cutting into already thin margins. Lower profits mean fewer jobs and could even force some dealerships to close. The United Auto Workers fear a slowdown in the EV transition, threatening billions in factory investments and job security. American automakers could see their own petrol cars undercut by discounted Canadian models. The result, less incentive to invest in EVs, and more pain for the very workers building the future of American mobility. A policy meant to help the environment could end up hurting the people driving the change. The Canada-US dispute is part of a bigger story: China's rise as an EV superpower. Over the past decade, China has invested heavily in electric vehicle technology, infrastructure, and production capabilities, positioning itself as a dominant force in the global market. China dominates the global EV supply chain, from minerals to batteries to finished cars. They control a significant portion of the world's lithium and cobalt mining operations, essential components for EV batteries. This vertical integration gives Chinese companies a competitive edge. In Europe, Chinese brands are already outselling legacy automakers. Thanks to low prices and advanced tech, European consumers are increasingly drawn to the affordability and innovation offered by Chinese electric vehicles, which often come with features that rival or surpass those of established brands. The US fears a repeat, that Canada's mandate could open the door for Chinese EVs to enter North America. American policymakers are concerned that an influx of Chinese electric vehicles could undermine domestic automakers and shift the balance of power in the auto industry. If traditional automakers can't meet Canada's quotas, Chinese companies could step in. This scenario could lead to a significant market share shift, with Chinese brands filling the gaps left by North American manufacturers, who struggle to keep up with the new regulations. Once established in Canada, Chinese brands could easily expand south, given the integrated market. The close economic ties between Canada and the US mean that any significant presence of Chinese EVs in Canada could quickly spill over into American markets. The US sees this as a battle for the future of mobility and is determined not to lose. American leaders are ramping up efforts to support domestic EV production and innovation, aiming to counteract the growing influence of Chinese automakers. The fight over Canada's policy is really about who will control the next era of the auto industry. As the world transitions to electric vehicles, the stakes are higher than ever, with global superpowers vying for dominance in this rapidly evolving sector. The US is weighing its options to counter Canada's EV mandate. One path: challenge Canada under the USMCA, risking a trade war and retaliatory tariffs. Another: impose targeted tariffs on Canadian petrol cars to block dumping. Or, the US could negotiate with Canada for more flexible rules or joint investments in charging infrastructure. The most strategic move: double down on supporting the American EV industry. More tax credits, more domestic battery plants, faster charging networks. The goal: make US-made EVs so attractive that dumping becomes irrelevant. The outcome will shape the future of the North American auto market and the global race for EV leadership. The US must choose confrontation, compromise, or competition. The North American auto industry stands at a crossroads. Canada's EV mandate has triggered a chain reaction, trade tensions, economic risks, and a scramble to adapt. Automakers face a maze of conflicting rules, while the risk of petrol car dumping threatens both markets. All this unfolds as China's EV juggernaut looms large. The US and Canada must find common ground, aligning climate goals with economic realities. That could mean new trade rules, joint EV standards, or a fresh approach to managing the green transition. The alternative? A fractured market, lost jobs, and a North America left behind in the global EV race.